Welcome to my YouTube channel, guys. So in today's video I'll be doing a technical analysis on some major pairs. So first thing first, I will start from S&P 500. So the way I like to trade is I go on the monthly time frame to see the overview of the market, to see where price is going, the overall direction of the market. So on the monthly time frame, as you can see, price was trending to the upside, creating on these bullish candlesticks. Then I will go to the weekly time frame to plot my key levels. So I'm basically a swing trader. So I will go on the weekly time frame to plot my key levels, as you can see. So these key levels are plotted on the weekly time frame. So after that, after I identify the direction of the market and knowing that price is trending to the upside, then I will bring out my trend line. So the trend line is going to be a guide on how market is moving. So as long as price is trading above this trend line in an uptrend, the trend is still bullish, and as long as price is trading below it in a downtrend, then the trend is still bearish. So as you can see, price is respecting this trend line. So this was the first touch and this was the second touch of the trend line. And for a trend line to be valid, a trend line needs to have a minimum of 2 touches. Then the third touch is going to be the one you'll be using for a trade entry. So the third touch of the trend line is the one you'll be using for a trade entry. So price was trending to the upside, and on a daily time frame, so I already identify the direction of the market, and I've plotted my key levels on the weekly time frame. Then when I come to the daily time frame, the daily time frame is where we came to look for the entry. No, I mean where we came to look for the immediate trend within the overall trend. Like, you can't really trade on the weekly time frame and on the monthly time frame. They are just for analysis, to know where price is going and to plot major key levels. So on the daily time frame is where we come to see what price is currently doing and where price is, if price was in a support or a resistance level. So the daily time frame is where we come to check how price is moving and what price is currently doing. So that's what we come to do on a daily time frame. So on the daily time frame, I already see this market. So this was a high, this was a higher low, so this was a higher high. Then price came back down to this zone. So price came back to touch this trend line for the third touch. So like I said earlier, for a trend line to be valid, it needs minimum of 2 touches. So for a trend line to be valid, it needs minimum of 2 touches. So the third touch is the one that you'll be using for a trade entry. So, and now price has come to touch the trend line for the third time. So this was the third touch of the trend line, and there was a minor zone at this region. So I draw this zone on the daily time frame. So there was a minor zone here. So when price got here, it got rejected, and when price was trading above it, it was acting as a support level. So this level is a valid support level. So now already price was touching the trend line for the third touch. So I was already looking for buying opportunities since the direction of the market is to the upside, and price came back down to touch the trend line for the third touch. And also there was this key level at this region, this daily support level. It was right here. So that's another confirmation for me to enter the trade. So on the 4-hour time frame, when I came to the 4-hour time frame, on the I entered this trade on Friday before the market closed. So for my entry, I I usually use the 4-hour and the 1-hour time frame for my trade entry. So when price came into the trend line for the third touch, and also this area, this support level that I drawn out on the daily time frame, then after I see this candlestick forming like this on the 4-hour time frame, then I stay to the 1-hour time frame to see if, because the candlestick that was forming on the 4-hour time frame is too big, so I can't use that to enter a trade. But when price got here, as you can see on the 4-hour time frame, price created this bullish engulfing candlestick. So this is when I got into the trade, after seeing this bullish engulfing candlestick, because this candlestick signifies that most buyers are now in the market and buyers are overthrowing sellers. So after I see this bullish engulfing candlestick, then I place the trade on Friday. I remember placing the trade on Friday, and my stop loss go below this support level. So this was the support level. So my stop loss go below it. I might take profit to the next major resistance level. So before getting into a trade or before starting your analysis, you need to go to the higher time frame. So if you are, let's say if you are a day trader, you need to go to a higher time frame, let's say the daily time frame, to see direction of the market, where price is going. Then you scale to a lower time frame to draw your key levels, to map out your key levels, your point of interest. So after drawing your key levels, then you came to a lower time frame to find an opportunity to get into the market. So at this trade, when on the daily time frame, so like I said, i I already draw this trend, as you can see, and when price came into it, price starts forming this bullish, I start seeing all this bullish reaction, and after that I still realized that there was a key level at this region. So this was a key support level, so that's the reason why I got into this trade. And now I'm expecting SPX500 to get into this zone. So the next level target for SPX500 is this zone right here. So this is going to be where I'll be taking profits on SPX500. So on, let me go to US30. So I did my previous video, I talk about US30, and at that period of time, US30 was at this region. So US30 was trading around this region when I did the analysis, the last video on my YouTube channel. You can go and check it out. So this trend, the overall direction of the market on the monthly time frame is bullish. So this is how it looks on the monthly time frame. So everything was trending to the upside. Then I go to the weekly time frame to plot my key levels. So these key levels are plotted on the weekly, but this one is plotted on the daily time frame. So I plotted my key levels on the weekly time frame. So on the daily time frame, I then see that, so I said in my last video that I'm expecting US30 to come into this region because this was a Fibonacci retracement level. So, and if I drag it from the bottom to the high like this, so this was a Fibonacci retracement level, so this zone, and there was still a zone at this region, a support level at this region. So when price got here, price got rejected and moved away from it. And also yet when price got to this region, price bounce off it, then starts heading higher. And same thing happens here when price was trading below it and retest, price still got rejected and moved back down. So that's the reason why I plotted this key level on the daily time frame. But what I'm saying is that the trend is to the upside, so I'm expecting a higher low to be created before I can enter the trade. But I was a bit worried because, if for those that watched the last video that I make on US30, I said it seems that the trend is getting weaker. And the reason why I say that is, so price was creating higher high, higher low, higher high. So after price create this higher high, price is supposed to create a higher low, maybe somewhere around there. So price needs to create a higher low, but that does not happen. Price came back down to this region to create a equal low. So this low was equal to this previous low. So price came back down to create an equal low, and after that price still starts heading higher. So at this region I was still expecting price to create a higher high to start heading higher, but this seems like a double top. So it was this high as well is still equal to this high. So this recent high is still equal to this previous high. So I was a bit worried that, okay, maybe there wanted to be a change in trend, so maybe price just wanted to break this trend line then start heading lower, but that does not happen. But I also said if I can see price coming to this region, so okay, so if I can see price come into this region, this Fibonacci retracement zone and this support level, then I'll be looking for buying opportunity if I see a bullish engulfing candlestick. So on there, and then I scale to the 4 hour time frame to look for my entry. So on the 4 hour time frame, the 4 hour time frame is still similar to the one on the SPX500. So when price got here, price starts creating this bullish candlesticks. So as price was moving higher like this, I can't really use this 4 hour time frame to enter, because if I enter like this, my stop loss is going to be very wide. So then I scale to the 1 hour time frame to look for my entry. So the one I got, so as you can see on the one hour time frame, price has created this bullish engulfing candlestick after this doji candlestick. So price created this bullish engulfing candlestick. So this signifies that more buyers are in the market. So after seeing this, I will then get into the trade. So I will get into the trade around here, and my stop loss will have to go below this level, below this support level. Then my take profit is going to be the next resistance level like this. So if you are getting into a trade, like I always said, firstly you need to identify the direction of the market, where price is going. So, and that's for every trade. It does not necessary to go to the monthly time frame to look for the direction of the market. You can still check the direction of the market on the weekly time frame to see what price is doing on the weekly time frame. Then you can plot your key levels on the weekly and the daily time frame. So the 4 hour time frame or the 1 hour time frame is what you are going to use for your trade entry. So as a swing trader, it's not really necessary to be analyzing, to be going on the monthly time frame, but it's just for direction, like for you to know where price is going. And then the weekly time frame is for you to plot your key levels. So even if you are trading, let's say you have a strategy that you are used to trade on lower time frame, let's say on the 15-minute time frame, and let's say on the 5-minute time frame, after identifying the direction of the market on the monthly time frame and see where price is going next, so you can just scale down to the daily time frame or to the 4 hour time frame to plot your key level. Then you can use your strategy, your 15-minute strategy and all that. You can use it to enter on the so you can use it to enter on the 1 hour or on the 15-minute time frame based on your strategy. So what I'm saying right here is price has gone to the upside, then retrace. So after seeing this retracement, after price coming to this Fibonacci zone, so that's when I decided to enter. So what the Fibonacci does is that it will let you know when a retracement is over. As you can see, when price was coming to this region, I don't know if retracement will be over at this region, because price might still continue heading lower. But having the Fibonacci, so let me draw it out. Having the Fibonacci at this region signifies that, okay, price, so this was the 50 and 61% retracement level. So when price goes here, I already know that, okay, price is done retrace and price might start heading higher from this region. And also there was still a support level backing it up. So this support level was still just like a back off to add to the confirmation. So I still use the support level for additional confluence to get into this trade. So after seeing price coming to this Fibonacci level and also this support level, so that's when I decided to enter the trade on the lower time frame, like the 1 hour time frame. So let me analyze one more pair before. Okay, so on GBP card, so the next pair I'll be talking about is GBP card. So the direction of the market on higher time frame, like I always say. So on the monthly time frame on GBP card, so price was trending to the downside. So this was a lower high, lower low, lower high, low, and a lower high at this region. So on the monthly time frame, the direction of the market is to the downside. I've already drawn my trend line. So this was the first touch and this was the second touch. And like I said, for a trend line to be valid, a trend line needs to have a minimum of 2 touch. So the third touch is going to be the one you'll be using for a trade entry, and confirmation with key levels, maybe support and resistance levels. So having price touch a trend line for the third touch and a high resistance level at the same time. So that's when you are going to be using for a trade entry on a lower time frame. So on this pair, I've already plotted my key levels on the weekly time frame, and on the weekly time frame, the direction of the market on the monthly time frame is bearish, but on the weekly time frame, price was trending to the upside. So let me on the monthly time frame. So this is how the monthly time frame looks, the weekly time frame I mean. So on the on the weekly time frame, price was trending to the upside, as you can see. So this this does not align with the monthly trend. So because the monthly is trending to the downside while the weekly is trending to the upside like this. So what you're doing, so now the weekly trend is to the upside, and so as the daily as well. So the daily is trending to the upside as well. So but what is currently happening now, this bullish trend that was happening on the weekly and the daily time frame is just a retracement back into this trend line area. So this is going to be the third touch of the trend line if price got here. So this is the third touch of the trend line of the weekly trend line. So I'll be expecting price to come into this trend line area, and there was still a support level, a resistance level at this region. So let me map it out first. So there was a resistance level around this region. So let me draw it out first. Okay. So now I'm expecting price to come into this region, this trend line region, to touch the trend line for the third touch, and then if price touch this trend line for the third touch and also touching this resistance level, so price will be coming back down, then break this weekly trend line so that the overall trend, the weekly trend and the daily trend will align with the monthly trend. So what is going to happen is, if price come into this trend line area, so if price can come into this trend line area and this resistance area, then got rejected, so I will enter the trade somewhere around there, and then I'll be expecting price to break this weekly trend line so that the weekly trend and the daily trend will align with the monthly trend, because the weekly trend needs to align with the monthly trend. If the monthly trend is to the downside and the weekly trend is to the upside like this, so this is just a retracement that was happening. So it's just a retracement back into the monthly trend line. So then it's just a retracement. So this trend is still to the downside, but the weekly trend is trending to the upside. So now I'm expecting price to got into this trend line, to touch it for the third touch and break this weekly trend line and also this daily trend line, to break it and start heading lower. So for now, though price was moving higher, but if price can got here and got rejected, so price will be moving lower and break this level to the downside. But if that does not happen, if price still continue respecting this weekly trend, then price will need to invalidate this monthly trend line and this monthly resistance level. So that's the thing that's the only thing that can happen on this trade. Price can go to this level and got rejected and start trending back down to break this weekly trend line and this weekly support level. But if that does not happen, price can still break higher like this and start heading higher. So if price broke higher like this, I'll be waiting for a retracement back down into this resistance level and this trend line area. So I'll be waiting for a retracement to start looking for buying opportunities. So I'll be looking for buying opportunities to this next key level, to this next resistance level. But if price got rejected from this area, price will continue heading lower and break this. So after price, so this is going to be like a first entry to get into the trade. So if I start seeing bearish engulfing candlesticks, if I start seeing selling pressure coming to the market, if price touches this zone, so I'll be looking for selling opportunity on the 4 hour or on the 1 hour time frame. So and if price was able to get to this level and break this level, so this is going to be another entry point. So there can still be another entry point at this region, so price will still continue heading lower, getting to this region. So it take profits if price broke this level, if price got rejected from this level and broke out of this weekly trend. So the next level will be the next level target is going to be this area right here. So this is what they call trend line liquidity. If price can broke lower like this area that this trend line touches area, they are going to be key level. They are going to be acting as a key level. So this is going to be, if price broke this level, this is going to be the first level target. So this is the first level target for me. So if price got here, I will move my stop loss to break even at somewhere around there. Then if price got here as well, price can still start heading higher. So I might close if I see candlestick confirmation, like candlestick reaction at this region. So if I start seeing bullish and engulfing candlestick, so I might be closing my trade if price got into this zone. But if this zone break, the next level target is going to be this area. So that's how trend line liquidity works, but I'm not going to dive deep into that. So what I'm saying is that what is currently happening on GBP CAD at the moment is just a retracement back into the monthly trend, line. So now the overall direction of the market is still bearish. So price is still trending to the downside, but the weekly and the daily trend is to the upside like this. So they are moving to the upside. So now if price can get here and got rejected, start forming bearish candlesticks. So I'll be looking for selling opportunities at this region, and I'll be expecting price to break lower, to break this resistance area. But if that does not happen, I'll just be waiting. If price was unable to break lower, I'll just be expecting price to break this trend line to invalidate the monthly trend. So if price can break above this trend line and resistance level, so it will invalidate the monthly trend, then this weekly trend will continue. So price will still continue moving higher and respecting this weekly trend line. So what I'm going to be waiting for, if price does not get rejected from this area, I'll just be waiting for price to break this resistance level and trend line, then retest for me to start looking for buying opportunities. So let me see if there was still another pair that I wanted to talk about. Okay, so on gold, okay, so this is what is currently happening on gold. So the overall direction of gold on the way, on the higher time frame, still gold is trending to the upside, and on the daily time frame there was a trend line at this region. So gold was trending to the upside like this, like so. Okay, so gold, the direction, so this is how gold currently look at the moment. The overall direction of gold was trending to the upside on a 4-hour time frame and on the daily time frame, but it seems like gold is now about to start trending to the downside. So gold has formed a reversal pattern, a head and shoulder pattern at this region. So this was a head and shoulder pattern at this region. So there was a formation of head and shoulder pattern at this region. So this was the left shoulder, this was the head, and this was the right shoulder. So, and for the chart pattern to be valid, price needs to break below the neckline. So this was the neckline of this head and shoulder pattern, and price have broken out of it. So currently now I'm waiting for price to retest the neckline of this chart pattern, of this head and shoulder pattern. So I'm waiting for gold to get, for price to get into this zone to retest it before dropping. So if gold got into this region, the next level target is going to be this low, this resistance level. So this is the level that gold will be heading to. So now, so this probably next week, gold should have already, maybe next week Monday or Tuesday, gold would have already retraced back into this zone. Then I'll be looking for selling opportunities to this next level. So the next level target for gold is going to be $2,888 per ounce. So now I'm currently waiting for gold to retrace back into this level, then drop to this next support level. So that's it, guys, for this video. So if you like this video, subscribe to the channel, like, so that it will keep encouraging me to be making a video like this and to be dropping market insights and others every week. So bye.